Hey everyone, welcome to another edition of the Buddy Study Group, and I am pleased to introduce our guest for today, Mr. Steve Elliott. Steve is going to be giving a presentation that I actually witnessed him give personally that I thought would be really useful and interesting for the group to be able to see him give, and it's on the buying line. So this is going to be kind of a sales process and really sales psychology sort of oriented presentation, something a little different for you guys. And we're happy to have you here, Steve. You can take it away whenever you're ready. And if you want to introduce yourself to the group, feel free. Oh, I got you on mute. Sorry.
There we go. Can you hear me?
Yeah, you're good.
The funny thing is I never do that. I'm always good about not being muted. Yeah, Jason and Mark, thanks for having me. Appreciate it. So yeah, just to introduce myself, some of you on the call know me. I've been doing long-term care insurance since 1995. And so this is my 29th year in the business. And long-term care is literally the only product I've sold since 1995. This is all I do. I'm a sales trainer. I speak at a lot of industry meetings. I just got back actually last week from the LTCi meeting where I was invited to be one of the speakers. The presentation that Jason's referencing is a presentation that I gave twice this year actually already. I gave it once at a sales training that is put on by the company I work with, which is LTCPG, which Mark and Buddy INS is connected to, and many of you on the call, or some of you on the call, also work with LTCPG. So we had a very intensive 3-day training at Madison, Wisconsin, at the NGL headquarters back at the end of April this year, and we're going to do that again next year. And then I also gave the presentation. I gave this particular segment of the training at a meeting for LTCPG in August. So I'm going to pull up my PowerPoint presentation here. Let's see. Okay. Can you see that?
Yep. Looks good.
Great. So let's see here. Let me click that. And we'll start from current slide. Here we go. So a lot of the sales training I do revolves around the psychology of selling, the psychology of buying. And so the buying line is something that I've talked about for many years. And it involves the idea that we speak to someone about a product, in this case, long-term care insurance, and their level of interest goes up and up and up. And then there's a point at which they cross the buying line where they are ready to buy. And a lot of us who don't recognize that buying line, in some cases, can literally talk ourselves out of the sale. So that's the premise going in. So, here's a couple comments that maybe you've heard before. Wow, Jason, you've given me a lot to think about. I'm going to need to digest this. I'm going to need to think this over, sleep on it. I'm going to need to go back and review all this. This is a lot of information. So I need to review this and see how it fits with all my other insurance. Really appreciate all the information you've given me today. You've given me a lot to think about. I'm going to need to talk to my kids, my financial planner, my neighbor. I'll need to consult the Oracle at Delphi. And another situation, have you ever gotten to the end of the presentation and you really thought this client was with you? I mean, you had great rapport. You loved them. You thought they loved you. Perfect candidates for long-term care, right? They've had personal experience. Her mom's in a care facility, and you thought for sure they were going to buy. But you got to the end of the presentation and she went cold as ice. And you're like, I can't believe she didn't buy. Another comment, I just really appreciate all that information. You're really good at what you do. You're good. You're really good. I'm impressed, but they don't buy. So I have a term for this. I call it information boy or information girl. You have spent a couple hours with this client. You have educated them. You've provided them with lots of great information, but they don't buy. And they probably won't buy even when you follow up. So congratulations, you've become information boy. So here's a couple other comments that I'm always looking for. When I'm talking to my clients, I'm looking for people to say, Steve, wow, I thought this was complicated. You've really kept this simple. Appreciate you making this such an easy decision. This is a lot less complicated than I thought. I really feel good about moving forward. You've really made this process easy. Or they just are like, hey, this looks good. Let's get this going. So that's the difference between understanding the buying line and not understanding the buying line. Now, there's a couple of important things to kind of understand. So this is by the way, a super crude drawing of the buying line.
This is amazing.
Yeah, but it's all you need to know. I literally did this like 10 minutes ago. I couldn't come up with a graph. I was looking for a graph and I couldn't do it. So, what it comes down to is you have the level of interest of the client and the time period, and the buying line, goes up and up and up as they like you and like what you're saying and feel comfortable with you and feel like you're showing them something that's going to help them solve their problem. And you've really done a good job of peeling the onion and creating a sense of urgency. And you've done a good job of creating a buying atmosphere versus a selling atmosphere. And then at some point, they cross over that buying line. But eventually that buying line will start curving down, or the level of interest for the client will start curving down, and they will cross past that buying line. And so it comes down to a couple of concepts that you need to keep in mind when you talk to people. The first item is people think 7 times faster than you can talk. People think 7 times faster than you can talk. As I'm talking to you right now, many of you, your minds are going across the globe. You're thinking of your vacation coming up. You're thinking of what you're having for lunch. You're thinking, I need to go shopping. You're thinking of all kinds of stuff way faster than we can talk. You're thinking about all kinds of stuff. Another concept is people love to buy, but hate to be sold. People love to buy. Don't you love buying stuff? I mean, if I wired you $1,000 right now and said, you got to spend it in an hour, we would all be pretty excited. Let's go buy something. We love buying, but we hate to be sold. Our natural reaction when someone comes up to us in the store, may I help you? Just looking around, just shopping. Also, people take action when they feel dissatisfied with their current situation. This is a very powerful one. People take action when they feel dissatisfied with their current situation. And it applies almost to virtually everything we do. We are hungry, so we eat lunch. Our phone has a cracked screen, so we need to go buy a new phone. We need to go get that iPhone 16. Our car has been breaking down a lot. It's time to buy a new car. Almost everything we do is because we feel dissatisfied with our current situation. People buy emotionally, but justify logically, especially with this product. This product, more than many products, is an emotional sale. So people will buy it because they don't want to be a burden on their family. They want to protect the assets they've worked so hard for, and there's emotion behind it. They want to protect their lifestyle. They want to protect their legacy. They want to make sure they can send their grandkids to college. They don't want to have their kids experience the pain and the stress and the turmoil that they experience dealing with their own mother or father. But at the same time, they justify logically. When people say, why did you buy long-term care? They'll give a lot of logical reasons. And we all do it. We will purchase a car and we'll justify the purchase because, we got a good deal. It has good gas mileage. It's a new EV car. We love, we have a lot of new, advanced electronics components to it that makes the car safer and allows me to to use my Apple CarPlay, but really we bought it because we like how we feel in that car. We love the emotion. We love the color. We love how fast it goes. We bought it largely on emotion, but we will justify to people why we purchase it through logical reasons. Also, people often don't mean what they say or say what they mean. This is classic. You're on a conversation with someone about long-term care insurance, and they're saying, I'm not really sure I need this. Nobody in my family has ever needed care. We all live to old ages. We all live to in our 90s, and then we drop dead. But you're sitting there thinking to yourself, yeah, but you contacted me, and I called you last week, and we did a pre-screen call, and then we scheduled the appointment for today, and you're here. We're talking about it. So why are you giving me all these reasons why you think you don't need long-term care? And people don't waste their time. They're talking to you because they are interested. They do want to buy, but they're afraid. They're afraid to be sold. Remember, people love to buy but hate to be sold. There's a lot of natural defensive comments and posturing that goes on when you talk to people. And the last one is frustrated people don't buy, and this really applies to the buying line. Many sales that you thought you had, and then it did not end up in an application, it's because you frustrated them at some point. You literally talked yourself out of the sale, or you frustrated them in some way. And maybe you can't see it. They're smiling, they're laughing. Oh yeah, I love you. You're so great. You're so good at what you do. But you're in their mind, they're frustrated. So let's talk a little bit about this. So I think all of us have a sales script. You should have a very set presentation. The presentation that I personally designed back in 1995 when I started this job is the sales script that we still use to this day when we do the sales training through the LTCPG sales training course. And the sales training is designed to lead a client from one thought to the next, to where they get to the point where they want to buy. And I can just kind of give you the overview here. I'm not going to go through the whole presentation, but we speak to a client. I think most of you are like me, where you're not talking to an existing client. This is someone who's new. I think most of you are probably long-term care specialists. And so I'm often talking to someone I've never spoken to before. I don't do Medicare or annuities or financial planning. I'm a long-term care guy. People contact me through different lead sources, and they want to find out about long-term care, and they've never met me. And so I come into the conversation where this person is thinking to themselves, who is this person? Are they good? Are they knowledgeable? Are they going to have my best interest at heart? They're thinking these things. They come into the conversation wondering can they trust you? Are you going to be able to help them solve their problem? And keep in mind, they do have a problem. That's why you're talking to them. Once again, they must feel somewhat dissatisfied, because that's why they put a request in, scheduled a call, and now they're speaking with you about this subject. They're not sure they want to do it, but they suspect that this is something where they feel dissatisfied. And if you can go through the process with them, most of the time at the end, they're going to buy, because long-term care makes a heck of a lot of sense for people. There's once again, just a flood of emotion about why long-term care is something that, is something people want to take care of. So do they have a problem? And if you can help them solve their problem and do it in a way that is affordable, most people are going to take action. So this is going to walk through this. So you start off where you come into the conversation, they're like, who is this person? And in the beginning, you spend a little bit of time just getting to know them. So how long have you folks lived here? Do you have kids, grandkids? And then you get into the topic of long-term care. You transition into the topic, and many of us have a personal story. So we talk about how, I got involved in this because of my own grandmother. They often share their own stories. They're talking about people they've known their mom, their dad, how they were a caregiver. And immediately things are happening. They're starting to like you. They're starting to trust you. They're starting to see that you're probably a real professional. And then you go from the topic into, for me, it's denial. You always want to talk about overcoming denial, because the biggest reason people don't buy long-term care is because they don't think it's going to happen to them, or more commonly, they don't think it's going to happen anytime soon. So there's absolutely no urgency about this. Long-term care is a future event. It's not today. It's like 30 years down the road. So there's no urgency. I'm just investigating this for the future. It might make sense, it might not, but there's no urgency. But when you cover denial, you cover the major topics to address their level of denial. And people have different levels. There's what I call absolute denial, where a lot of, especially this is the man, the guy, the husband who's on the call who doesn't even want to be there. The wife is the one that, scheduled the call. She made him sit in on it, but he doesn't want any part of it because he's never going to need long-term care. It's a total denial. Not going to happen. Then there's apathy denial. Apathy denial is the guy who says, well, if it ever happened to me, I would just kill myself. I love that one. I had a guy literally yesterday, client in Florida. He said, if I ever got to that point, I just might jump on my boat and drive straight into the hurricane. I'm like, that's a good one. So I hear it all. I'll take the cyanide pill. I'll do the S&W pill, Smith and Wesson. They have this apathy where if it happens, life wouldn't be worth living. So I'll just off myself. And that, you don't see a lot of that. You see a little bit, especially with the men. Then there's the misinformation denial. And misinformation denial is where people say, well, I read very few people need long-term care. It's like 60% of people never need it. Which is a weird concept, because that means 40% do. But they read something, they heard something, they have information that makes them not want to buy long-term care or question whether it makes sense. And then there's the most common, which is procrastination denial. It's not gonna happen anytime soon, so there's no urgency. So when you address these denials, I always make 4 points. In my presentation, I make the point: long-term care can happen to anybody at any age. It could be accidents. It could be care in the home, because some people have a misconception that it's nursing home insurance. And then lastly, it could be temporary. Long-term care is not necessarily some end-of-life thing. I mean, it could be, or it could be that you have a stroke, or a bad accident, or a fall, or cancer, and you need care for 6 months or a year, but you eventually get better. So I make those 4 points. So now people are really creeping up this buying line. They're going, keep in mind, people are thinking 7 times faster than you can talk. So as I'm talking, they're leaping ahead to, I'm glad I'm looking into this. Gosh, I probably should have looked into it sooner. I didn't realize that a lot of people need care at younger ages. It didn't dawn on me it could be an accident. And a lot of times as you're making these points, they're thinking of personal situations. They're thinking of someone they knew at work, or someone they knew from college who was in a bad accident and became paralyzed. They're thinking of situations of people they've known. Their mind is racing way faster than you can talk. And so they're already thinking, this sounds like this is something that I should probably take care of. They're feeling more dissatisfied. And then you go into peeling the onion, basically establishing the need. So most of you are probably aware that, you basically, ask questions like, if long-term care were to occur, if you had a sudden accident or some crazy illness and you suddenly need care, and that could be care in the home or in a facility, what would you want to protect? Why would this insurance be important? And they say, I want to protect my assets. And you say, well, I understand why that's important to a lot of people. Why is that important to you? Well, I wouldn't want to need care and compromise the lifestyle of my wife, which is what happened when my father needed care. They spent all their life savings, and we've now been supporting my mom ever since. I want to pass the assets on to my family and my grandkids. And what you're doing is you're getting to the emotional, you're getting people to emote why long-term care makes sense. I don't want to be a burden. When you say you don't want to be a burden, is that because are your kids in a position where they could be caregivers, or is that something you just don't want to put on them? I don't want to put it on them. I went through this with my mom, and my mom went through it with her mom, and it's a lot. It's very stressful. It's very consuming. I don't want to put this on my daughter. And so they're starting to emote. Immediately, you're getting close to this buying line now. They're really right here. They're right towards the top now. Now, in many cases, you've only been talking to this person for 20 to 30 minutes. 20 to 30 minutes. You've got rapport. You've overcome denial. You've established need. You've got them to emote. Now, there's one more thing that I like to cover, which is I customize the plan based on their finances. But they're already starting to think in their mind, this makes sense. This is something I should do. And in fact, I shouldn't put it off any longer. Steve's right. Long-term care can happen to anybody at any age. And immediately their next thought is, how much is it? How much is it? How much is it? And if I don't get to the price point quickly, if I pull out the brochure and we start going deep into, let me talk to you all about long-term care. These plans have bed reservation. They have respite care. They have, and you can go on and on and on. Let me tell you about the writers. Let me tell you, in fact, we need to have an in-depth discussion about hybrid versus traditional. Let's spend 30 minutes on that. You are losing them. They are going literally past, they're going all the way out here now. They're feeling frustrated because you've established that it makes sense. You've established that it's something they shouldn't put off any longer. They want to take care of their problem. They feel dissatisfied, but they want to know how much it is. And if you don't get to the price point within about 10, 15 minutes, many people are going to start feeling frustrated. And what do we know about frustrated people? Frustrated people never buy. So I quickly, just customize a policy. And by the way, when I show a plan, if I pull up a brochure for one of the insurance companies, it's as simple as the company I'd recommend is XYZ. And these plans are very simple. In fact, they're actually federally regulated. So if you compare one plan to the next, they mostly look the same because they have to. They all have to have certain features and certain benefits. So the reality is, if you need care, if you have an accident or an illness and you're suddenly needing care, the plans pay for any kind of care. They pay for care in the home. They pay for care in a facility, assisted living, residential. And oh, by the way, the policies do emphasize home care. So there are some benefits for home modification, medical equipment. That's it. That's my whole presentation. That's the entirety of what I show people. And the reality is, when you go too deep in the product, once again, you're losing people, you're frustrating people, and it's also unnecessary. If I were to ask you what your home insurance benefits are, I don't think most of you could tell me. If I said, give me a detailed breakdown of the exact benefits you have on your auto insurance, same thing. You really don't know. Well, why is that? Well, it's because, we buy home insurance, we buy auto insurance, and why do we have it? Because if my house burns down, the insurance will help, pay for the damages or rebuild my home. If I get in a car wreck, it'll pay for the damages or get me a new car, pay for the medical bills. I mean, that's as simple as most people understand insurance. So when it comes to long-term care, all people need to know is if you need care, the plans will pay for care in the home or in a facility. That's it. Keep it simple. And then I get into policy design where I usually show a couple options and they're right here in this buying line. They're in the sweet spot. And as long as I can now, they're thinking, how much is it? How much is it? How much is it? As long as I can, get to that price point in a fairly quick amount of time, most people are like, great, let's do it. You've really kept this simple. this was easier than I expected. So it's that simple, the buying line. So I thought I would just give an overview and then open this up to questions.
Yeah, I'd love to know, Steve, how you are transitioning. Once you know you're ready to go and recommend a carrier, how do you think about plan design when you start hearing from the client? How do you gain an understanding of their budget to be able to actually talk premium with them?
So once I've established that long-term care makes sense, because they've told me, yes, I want to protect my assets. I don't want to put this on my kids. You do a trial close. I say, Jason, so it sounds like from what you've told me, sounds like in order to protect the assets and protect your wife's long-term lifestyle, also not be a burden on your daughter. I think what we're talking about here is maintain your independence as much as possible. It really sounds like if we could find a good company that was affordable, then yeah, you would rather be insured than uninsured. And they say, yeah. Then I say the transition there, Jason, is I say, now the other part of long-term care planning is when the plans are properly designed, they should be custom tailored. I'm a big believer. I don't want to overinsure. I don't want to sell, I don't want to sell my clients more than what they need. So it gets into this conversation about when you design a plan, we can fully insure or we could co-insure. Fully insuring would be the idea that we design the plan to cover all the costs. You could go to some beautiful facility and I could design the plan to pay every penny. Now, for most people, that's not necessary. For most people, usually the optimal solution is going to be co-insuring. And co-insuring is the idea that if you're needing care, well, that is the point of life where you're not spending your income like you are when you're healthy. If you're needing care, you're not traveling, you're not driving at this point. So most people can comfortably afford a certain amount of the cost. So my objective is to get a little bit of a sense of what that would be and then have the insurance pick up the difference. So for me, it's about really trying to customize this plan, hopefully get the premium into a more affordable range, while at the same time also making sure the plan will provide enough coverage so you're not having to liquidate and spend down your life savings and retirement funds. Does that make sense?
Yeah, definitely.
Now I have complete permission to ask them financial questions. So I do financial discovery. Do you own your home? Do you have a mortgage? Do you own other properties? Are you self-employed? What's your monthly or annual income? How much discretionary money do you have at the end of the month? Do you have an HSA? Do you have a whole life policy with any cash value built in? And how much do you have in total savings and investments? And so that gives me that picture, which number one allows me to see, what are we protecting? Number one. Number two, how much co-insurance would be appropriate? And number three, it also helps me evaluate if there might be some kind of, funding mechanism that could be beneficial to them, a la pay money from an HSA, tax-free, do a 1035 exchange on their whole life plan. Or maybe if their income is tight, but they have some good savings, we could also talk about, using some interest off investments to fund a long-term care policy.
Love it. Does anybody on the call have any questions for Steve? I definitely recommend picking his brain. Steve has a long history and is very, very effective at what he does. Susan asks, when are you normally asking medical questions?
So I pre-qualify people. When a request comes in, I call them and, of course, do most of the health questions on that first short call. It's just a pre-qualification call. I try to keep it around 10 minutes and just basically convey to the client that not everybody qualifies for this coverage. So I need to go through a few health questions. And, I cover most of it in the introductory call, but I do revisit it when I do my presentation call. My presentation call is usually 45 minutes to an hour, and that's even with taking an application. And I usually take applications 3 out of 4 presentations. But I do hit it just because sometimes in that first call, they don't tell you everything. So a lot of times when I do the presentation, I just, say, okay, it's right before I show the company. So right before I'm going to, I'm thinking in my mind, I'm going to show this company. But before I do, I say, now the company I show you is largely based on your health. Now I know we spoke a few days ago and you told me, this, and you told me this, you told me that. Now, is there anything else I should be aware of? Is there anything on your medical records, especially last 5 years, anything on the records that I should be aware of that, we haven't talked about? And it's amazing how often someone brings something up. Well, I did have this, or I did have that. I'm like, oh, okay. I'm glad I found that out. And I do, a few more follow-up questions. Depends on what their health is, right? So depending on the health situations, I could do a deep dive. And sometimes it's, if they're pretty healthy, I spend another 5 minutes and then we dive into the product.
Yeah, sounds typical. Health questions coming almost as soon as hello in most people's sales process. We had a couple people that were kind of just talking about cost, and that's a major objection that they're getting on the whole. It's like Gerald mentioned it in the chat. It's kind of like a cost versus want sort of proposition. What kind of plan designs do you find really effective for folks who are cost conscious? Or are you in your kind of financial discovery really opening up avenues that they might not have thought of to be able to fund their long-term care? I guess I'll just let you kind of riff on that.
Yeah, I mean, it's all over the board, it's always an adventure looking at someone's overall financial picture. But cost consciousness is pretty big these days. I've done this for 29 years. So, the policies are harder to qualify for. The premiums are higher. The gender-based pricing can be brutal sometimes, especially if you have a single female. I'm like, man, this is, if she wanted to, get $6,000 a month benefit, we're looking at, maybe almost $500 a month in premium. It's brutal. So I will say I am a big believer that some coverage is better than no coverage. I've just talked to too many people. Most of us who do this a lot, we're talking to more and more people where their parents are needing care and their parents have a long-term care plan. So I'll give you a quick, story. I had a client where her father had a long-term care plan and her dad's plan paid $3,000 a month. I mean, he literally bought this thing 20 years ago with no inflation protection. So he's had it for 20 years and here he is, within his 80s and he's needing the care now. And the plan's paying a measly $3,000 a month. But I asked the lady, I said, so I'm really curious. So the plan's paying $3,000 and how much is this care? Oh, it's $7,000 for the assisted living. I said, so I'm curious, in your opinion, how valuable is the plan? And she said, oh, it's wonderful. She said the insurance pays $3,000, his Social Security is another $25,000, and we're also renting his house out. So between the rent, the Social Security, and $3,000 a month from the long-term care plan, is covered without having to deplete the savings and investments. So, it's stories like that where it makes me feel like, hey, something's better than nothing. So I do often look at a person's situation, and let's just say theoretically, I'm talking to a single female, maybe only has a couple $100,000 in the bank for her investments. She lives on an income that she only has maybe $500 of discretionary money. So in my mind, I'm thinking I got to keep this premium around $250, $300 a month, probably. Like I kind of just look at her situation. I'm like, if her discretionary money at the end of the month is $500, you can't design a plan that's going to be $500 or $600. She's not going to go for it. But if it's maybe, half of that, maybe if it's $250, maybe $300, probably a good chance that she would pull the trigger. So for her, I might have to design a plan that pays, say, $4,000 a month in benefit and maybe do a 2% compound inflation, like with Moo, and do a 20-year cap where the 2% will grow for 20 years. Or maybe, depending on her age, I might just build in a higher monthly benefit. So maybe instead of 4,000, I go 5 or maybe even more ideally 6,000 a month, but with no inflation. No inflation. And I explained to her, I say, look, you're in a situation where this is going to be a good amount of co-insurance. This plan is not going to cover all the costs in many situations, but it's going to help offset the cost. And if she's single, and so if she needs care, all her income coming in, if she's got that Social Security, if she's going to have, maybe she has a pension from an employer, she's going to have some money from her investments. I help her justify why that amount will be enough. And most people are like, yeah, sounds good. And it also does something for you. It helps build that level of trust even more, because I'm not trying to oversell her. She sees that I'm trying to work in her best interest. And you know, 95% of the time, people love the idea of co-insuring. It's basically presenting that third option, because most people think, well, I can either have long-term care or I can self-insure. Well, how about this middle ground?
Yep. Yep. And I like the perspective of knowing that there will be other vehicles there that are designed to help, and just kind of understanding how their lifestyle may change if they need care is another big point I take away from that. So Gene asks, how and when do you pivot with a couple when you feel covering one initially rather than both makes sense at the moment, when both are insurable, and which one do you lean towards and rationalize?
Okay. Yeah, and I do this a lot. I had a situation just last week where they were an older couple. I think the husband was 69 and the wife was, 64, and they didn't have a lot of discretionary money. And I said flat out, once I did the financial discovery, I said, if I can make a recommendation, I think you're going to find the premiums are going to be prohibitive for the two of you. And my recommendation is, and I've said this my whole career, if you're going to get coverage for one spouse, get it for the wife. The reality is women outlive men. Classic situation where this wife is, quite a few years younger than her husband. The odds are that if he needs care, she will be there for him. But the reverse won't be true. The overwhelming odds is she's going to outlive him. And as we all know, women are more likely to need care compared to men, just in general, and need care for longer periods of time. And when you explain this to people, I mean, and almost everybody completely agrees. I mean, they're like, oh yeah, if you walk in the care facility, it's full of women, right? So people know this. People know that women are more likely to need care. Now, there are exceptions to the rule. It could be a situation where maybe the wife's a lot younger. Maybe the wife is only 52 and the husband's, 60 years old, and they're really kind of focused on him because of especially family history. Dad has Parkinson's, mom has dementia. So in that situation, then I would say, yeah, well, let's focus on Bob. I think that's the smart way to go. And Mary, you're 50. So if you put this off for a few years, it wouldn't be a big deal in premium. Premium isn't going to grow that much. And given your situation, I think it would be smart to go ahead and lock in a plan for Bob. And then we can always add you in. So, as your financial situation improves, as your kids get out of college, you have a little more discretionary money, we can always circle back and look at this for you in a few years.
Awesome. Let's see. Diane says, I follow a similar script with all my meetings, and I get some that say I'm a little overwhelmed, I have to think about it, and I get a lot who thank me for making this so easy and simple. So what's the difference? I think that's a great question.
I think it's just being conscious. It's just, having an awareness of a lot of these points that I've made. People think 7 times faster than you can talk. People buy when they feel dissatisfied. And it's, and every client's a little different. Obviously it's not boilerplate here. Some clients are ready to buy within 20 minutes. Some people do need more information, and we need to talk through how, their other health insurance doesn't cover long-term care. Medicare is what Medicare does. Here's what disability insurance does. Disability is, sounds similar, but it's different. It has a different purpose. So everyone's a little different. But I think the key is to keep things as simple as possible, which to me means don't share more information than you need to share. They don't need to know bed reservation and all these these ancillary benefits that can come with the plan. You want to just keep it simple, establish why long-term care makes sense, establish that it's something that they really shouldn't wait any longer on for a variety of reasons. And then most people should just get to the end and say, you've kept this simple. You've done your job when they make comments like that. This was really good. This was easier than I thought. You really explained this well. When you hear things like that, you're doing a good job. Some people will give you the information comment just because they don't want to buy. That's the classic comment at all times. But if you hear it consistently, if you're hearing a lot of people, wow, you've given me a lot to think about, and especially for the clients where they really shouldn't be waiting. There's clients where it's like, this just makes sense. His birthday's next week. It's iffy whether he'll even qualify, which I've conveyed to the guy. I've expressed to him, look, I don't know. You've got some health issues here. I could see this going either way. But even when they have all the incentive in the world and they still don't buy, maybe you might want to reevaluate how much information you're sharing, and are you being conscious of that point in the presentation where they're ready to buy, but you don't get to the price for another 30 minutes. That's where you're frustrating people.
Love it. Linda's asking, do you talk about the cost of care specifically on your meetings?
I don't pull up graphs and necessarily show them the cost of care in their area. I talk more in general terms, and a lot of it is also based on their experience. So 80%, if not 90% of the people I'm talking to have had a personal experience. And so when they talk about their parents' care, a question I'm always asking is, oh, how much did that run? How much is her assisted living? How much did you folks spend for that home care, that part-time home care you paid for? What was that running like a month? So that helps me understand a benchmark. Now, one thing that happens sometimes is you talk to someone and they're like, my mom's in a facility and she's spending $20,000 a month. And I always cringe. I'm always like, man, this is a tough one, right? It's tough because I have to sell this lady on why, a $5,000 monthly benefit will be sufficient. And so we're starting at 20,000, So, I usually will say, well, she's in a nursing home. She's probably receiving quite a bit of care for that amount of money. She's probably in a private room overlooking the ocean. So I help them understand, look, the reality is most people are going to stay home as long as they can. In 2024, usually if you can't stay home, the vast majority of people are going to go to assisted living. Nursing homes are kind of last stop, right? Like nobody goes to a nursing home till the end. So we have a long-term care plan here that I've designed that's going to give you $5,000 a month, which is a good amount for most home care. Now, when I say most home care, I'm talking 4 to 8 hours a day, right? We're not talking 24/7, but that's what most people who have home care, that's what they get. Most people who have home care get 4 to 8 hours of home care, 48 hours a day on average. And then assisted living, 5,000 is going to go a long way to helping offset the bulk of the cost. Now, sure, certain facilities are going to be more, but once again, if you get to that nursing home like your mom's at, that's probably end of life. So at least you had a long-term care plan that helped cover a good majority of the cost for the home care and the assisted living, and the plan maximized your ability to stay home because it does have these benefits for home modification, medical equipment, and the policy is also going to take a lot of burden off your family because this plan has a nice care coordination. So this policy can help assist the family through this process and take a lot of burden off them as well.
Love it. Okay. Let's see. Mark is asking, what is the average length of underwriting? How many weeks? I think that's definitely going to be different from client to client.
Underwriting runs usually, these days anywhere from 3 weeks to 2 months. Some of the carriers are getting pretty quick with the underwriting. I'm pretty proactive when I do underwriting. Obviously, I'm doing a good job doing field underwriting. I also submit medical authorization forms before the carrier asks for them. So here in California, Kaiser, Scripps, Sharp. If I know they're with Kaiser, I have them sign the Kaiser form up front, so we don't have to like order records and have them come back and say, "Hey, we need the Kaiser form," and delay the whole thing 2 weeks. I get
Yeah.
the Kaiser form up front, which helps speed up the process.
Yeah, that's a good tip. Let's see. Sharon is asking, do you do any short-term care plans, or are you purely long-term care
I do
focused?
a little bit, but so the two states that I predominantly sell in are California and Florida, and we don't have STC in those two states. But I do work in some other states where STC is available, but that makes up a much smaller percentage of my business. So yeah, sure, I do STC, but just based on my territory, I don't do it as much as a lot of people.
Sure, makes a lot of sense. Gerald is asking, since you sell, do you find yourself selling more traditional LTC or more life long-term care hybrids?
I'm a big traditional guy. I mean, I do my fair share of hybrids. I probably place between 1.5 million to 2 million of hybrids a year. So I do a small amount, but for me, it's about 90-10, maybe 85-15. Um, the hybrids in general are a great fit for a small segment of people. The people that especially have the non-qualified funds. If they got 2 million in the bank and 500,000 in non-qualified, and we can use some of those non-qualified funds and put it into a lump sum or do a 10 pay. Certain people who are making great income, but that income is going to drop substantially when they retire, and they'll live on a much more of a fixed income. Just getting this done with before they retire and not have that ongoing lifetime premium can be advantageous. Obviously, 1035 exchange for existing whole life plans is a no-brainer. So I do them here and there, but your bread and butter middle American person who has 500,000 in the bank and a $80,000 a year income, that's a hard sell. And I personally don't feel comfortable having them take 100,000 out of their 500,000 to put into a long-term care plan. So for me, it has to be the amount of money they put in has to be a pretty small percentage of their overall portfolio. If it adds up to be too much, you're potentially compromising their future lifestyle.
Yeah, makes sense to me. Let's see. Ken asks, sorry if you already answered this, but I believe you mentioned the plans are customized to fit their financial ability to afford it, to avoid losing the client due to their frustration when they begin wanting to know how much it will cost. Do you offer up a typical/average premium range for a traditional or linked benefit to give them a baseline to contemplate?
I prefer not to. I would prefer just to, you know, let them know that I need to customize this plan. But so there's the client though, where they're actually in many ways self what's the word? They're basically self-filtering. Like you have a client and they're very interested, they see what mom's going through, but they live on a very fixed income and they don't have a lot of extra money. And so, you'll have people like, just give me a ballpark, give me a ballpark. And for those people, when I can sense that, I do. I can just tell. I'm like, and it's you're doing them a service and you're doing yourself a service. Now, in general, I don't. But if they're like really pushing it, they're like, look, I just worry about affordability. I don't have a lot of extra money. I'm retired. I'm living on a fixed income. Can you give me a ballpark? And I'll say, yeah, sure. Let me give you a ballpark. Let's see. You're 64, male. Sounds like you're pretty healthy. If you're healthy enough to qualify for a company that's a bit stricter with who they take, to say anywhere from a low of like 150 for a single man up to a high of like 300, maybe 350. I'll just give them like a wide range.
Yeah.
If it's a female, especially in the 60s, I'd be like, probably 250, 350 a month, somewhere in that range. Could be 400 if you want the really nice plan. But usually, I will go ahead and just let them know. And you'll hear the reaction almost immediately, like, oh, I can't do that. There's just no way. I was hoping it was going to be $50 a month. You're like,
Right.
no, it's not going to be 50. And then a lot of people though, surprisingly go, oh, okay, that's better than I thought. Okay, great. Let's go ahead and schedule that presentation call.
Yeah, I think that's a really good point. The self-identification can take care of a lot for you as long as you are sort of doing your due diligence and laying things out.
Yep.
Suzanne asks if you present and then the prospect emails you to say they aren't interested, or they just in some way let you know they're not interested. Do you leave it alone or do you try to find out why they didn't want to proceed?
Well, I'm assuming in the question that they didn't buy, and so it's a follow-up. I mean, it's a different story if they've applied and then they contact you a week later and say they've changed their mind. Because to me, when a person applies, it's a lot of commitment, right? Like they're giving you their social security number and their doctor's information and their medications, and the applications I take the banking information. I'm putting their checking account number in there, so it's a pretty big commitment. And so if someone contacts me after they've applied or after they've been approved, yeah, I certainly want to follow up because they had very strong reasons for doing it. So what happened? Did they talk to someone? Did they hear something? Did their financial planner recommend a hybrid? I mean,
Suzanne followed up, Steve, and said they hadn't applied yet.
so that's different. So when they haven't applied, so once again, I run at about a 75% close rate when I do my presentation. Now, the 25% of people who don't buy, most of them won't come through. Now I try, we get to the end and they go, I just got to think about it. I need to digest this and look at my budget. Okay, great. No problem. I'm going to email everything to you, give you a chance to review it. Now let's do this. Let's schedule a follow-up call. And, I'm sure between now and then, you'll probably have some questions. So in the follow-up call, I'll answer any questions. And then if it all makes sense at that point, we can go ahead and get the process started. Now, of the follow-up calls I schedule, I would say less than half come through. Less than half. It's probably like, probably 30 to 40%. So a lot of people contact me and say, yeah, we've decided against it. And if they do, I move on. I don't bother because
Perfect.
it's not, to me, it's not worth it.
Got it. And we'll make this the last one because we're coming up close to time. Do you have a minimum monthly benefit from Linda before extending the duration of coverage you're looking at?
A minimum monthly benefit?
Yep. Linda, if
Like
you want to also unmute.
like short
sure.
fat benefits versus long skinny. I think that's what Linda's.
Yeah, exactly. Yeah. So is there a point at which you said, gee, this is going to be a significant offset to the cost of care, and now we'll start going from 2 years to 3 years to 4 years to 5 years? Is there some number in there that you have in your mind, a percentage of the cost of care that you want them to cover?
It really varies. I mean, once again, it depends on their situation. And some people are also really motivated by having longer periods of coverage, because Alzheimer's runs in the family. So they really like the idea. Now, of course, we can take time to talk about the short and fat plan that you can, even though it says it's a 2-year plan, we can stretch this out to, 4 years, 5 years. So, I mean, it really depends on the client and what their goals are and how much they can co-insure and also what they're trying to accomplish. For couples, I'm big on the shared care rider. I do a lot of shared care riders because then we can talk about, combining those pools of money. But it's probably, once a person hits, especially mid 60s, the mid 60s is where the inflation starts to get pretty pricey. So below that, I usually, try to put in some kind of inflation protection. So somewhere between 62 to 65 is where we start to evaluate, is it better just to do a short fat plan and increase that monthly benefit, take the inflation out? And then I always present a variety of options. So as far as the length of care, I usually always show at least a 3-year and a 5-year. But I sometimes will, even show 3 or 4 options, depending on what they want to see. Because we might do a 3-year plan, but then there's a couple, so we'll do a 6-year shared plan, and then a 5-year plan, and then a 10-year shared plan. So, it just really varies from person to person. But I give them enough options where they can look at it and go, yeah, let's do that one.
Perfect.
And then I'll finish this up by also saying, oh, am I still sharing?
Oh, go ahead. Sorry, you can reshare.
So I mentioned that sales training that we did this last year, and it is happening again this year. So, oops, sorry, what happened?
You ended your slideshow, and then your share
There we
screen
go.
just dropped off.
So I just wanted to throw this out. I think, we're connected. Buddy INS is very close with LTCBG, and this is not an LTCPG meeting per se. It's for anybody that wants to attend. Anybody can come to this meeting. It's in Madison, Wisconsin at the NGL headquarters. In 2025, it's going to be April 28th to May 1st. And if you were interested, you would want to contact Jeremy Young, who is putting the whole thing together. And last year was fantastic. NGL really did it up right, paid for our meals, hotel was included. So NGL really, did a good job putting this on and being good sponsors. And we had myself and 2 other long-term care salespeople, and between the 3 of us, we're like in the top 10, if not the top 5 in all the big carriers. NGL, Mutual of Omaha, Thrivent. I'm usually number 1, 2, or 3 with Moo. I'm usually number 2 with Thrivent every year, and National Guardian, I was number 7 last year. So, we know what we're doing, and so just wanted to throw this out if anybody wanted to look into it.
Yeah, thank you very much.
Steve, can I add? I did the sales training last year in Madison, and it was absolutely fantastic. It is absolutely worth all your time to hear from the best producers. Just great ideas, great interaction with everybody else that came to the meeting. Some new people, some not, new to the industry, and it was well worth it.
Awesome. Thank you for that. And thank you very much, Steve, for being generous with your time and being here to give this presentation for us. I think all of us can use a reminder sometimes that as long as we're listening and as long as we're, working in everybody's best interest, sometimes we need to learn how to keep it a little bit simple and sort of take a step back and understand some of the intangibles that are not so intangible and understand the psychology of buying and selling. So really appreciate it. Hope you guys enjoyed. Hope you guys picked up 1 or 2 things that you can take with you. And that'll really do it. So thank you for being here. Thank you for watching the recording. If you're catching us on the recording, we appreciate you too. Everybody be well, and we'll talk to you soon.
Thanks, everybody.
Thanks, everybody.
Appreciate it.